Well, we did. We sent out an alert on May 9th warning about not only market collapse, or I hate to say collapse, but further risk ahead, and oil was part of it, suggesting that the WTI toward 90 had risk toward 90, and Brent, if it broke
that was
below,
a long time ago.
Yeah, it was a long time ago. You're absolutely right.
Do you have a conviction of when we get out? Do we get out, or do we have the courage to short? How do you discern between get out and short?
I think it's a little late to short.
But back then, I mean, back on May 9th.
Back then, one could have. I mean,
one could have.
We leave that to
she talks like the Queen of England. It's one this and one that. Let's talk seriously here about the equity market. Let's look at this research note from Ms. Yamada on the S&P 500. If we look at the S&P, one can identify three legs, each separated by a corrective trend and independent, I love that, independently generous. There's no doubt that this bull is long in the tooth. Bring up the chart as she describes it, and there we have one leg down, and now we're in another leg. What's the difference between a correction and a bear market?
Correction would be a move off the high of up to 15%. 10% would be the consolidation definition, and 20% or more is the bear market.
Bear.
Yeah.
So we're consolidating now.
Well, we haven't reached it yet. Obviously, a bear market is going to go through a correction before you get to the bear market definition, but a lot of the global markets are already there. And we've been warning about these long-term sell signals since last summer. July and August, the foreign markets went in on long-term sell signals. We have triple tops in place in many of those markets. And I think you have to understand that topping process is a very slow erosion. It's a sense of complacency which has been in place for a period of time. And if you look at some of these other markets, one of the characteristic things that one can do when you get 2- and 3-year topping patterns is turn them upside down. If they look like a bottom, then you're pretty right that you've got something that looks like a top.
That's exactly where I wanted to go, which is to the bottom. Do you subscribe to the idea you need a cathartic move at the bottom to be able to go long again, whatever the asset?
I think you generally have a cathartic move to the bottom, yes, but we would, unless it's a V bottom, which is very difficult to define from a technical perspective, we would rather wait for the confirmation, a secondary low on maybe less volume. But I think that at the moment you've got a situation where there's an enormous amount of confusion. We know corporations and individuals are moving money out of euros so that they don't end up with drachmas if something untoward were to happen. I think the energy patch is either discounting possibly an economic problem globally, and this is a global environment here, or
next time bring more paperwork. I mean, look at this. Look at all the paperwork you've brought. You should see it, folks. She's got like 100 pages out here. Okay, so we've got Europe, and we have a wide understanding away from your work that the central bankers could step in at any moment and you'd be whipsawed. How do you, in technical analysis, work knowing in the back of your head at any moment you could get a massive swing the other way?
Well, you can't really predict that, but you can warn for it. Which is obviously always on the table in the environment we've had over the past 3 years. But after that happens, there still has to be a period of repair. Enormous number of stocks have been badly damaged. Enormous number of commodities have been badly damaged.
And
the markets
consolidation in those is Facebook at consolidation yet?
No.
I haven't seen it. It's so new. I mean, I understand.
No, there's practically no chart on that one, and it just keeps going down. But if you look at that chart that you showed of the S&P in 2010, 2011, there's a period of months where you undergo something that eventually begins to look like a bottom. So
we're not there now in terms of a bottom.
No.
Bring up the dollar, if you would, just because of time. I want to be sure to get to the dollar. In honor of Mr. Zweig, the trend is your friend. And you can see here, Louise, a trade-weighted broad dollar, and it's just been structurally weak for pushing a decade. How do you interpret recent dollar strength, and can you go long DXY?
You certainly can go long DXY. The broad dollar index is one that we like from a structural perspective to look at because it includes all of the smaller markets among our trading partners. And if you look at the chart that you just showed, it can contain a kickback rally within the longer term downtrend that's there for the broad trade weighted dollar. But the DXY now has broken out nicely.
Right. Victor, wander over here. I hate to make you work so hard, Victor. Here's the DXY. And here is 2010, and then here's the dollar weakness, and up we go. This is, I would suggest, is a Yamadian hack that this is a pretty elegant chart with this leg up.
You got a head and shoulders bottom if you look at it,
Down
a
here.
more extended. Well, where are we now? No, between over the past year and a half.
Okay, back in here.
Yeah, that's the right shoulder.
Right.
Okay, and then now you've broken out through 80, which was our threshold. You've achieved 82, which was our first target.
Yep.
You probably get a little consolidation here and can move higher.